It's 5 o'clock in London, it's midday in New York, 2 a.m. in Sydney, midnight in Hong Kong, 9 a.m. in San Francisco, 9:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you in the world you are today. My name is Patrick L. Young, the IPO-VID live stream, series 30, episode number 2. In the aggregate, that is episode number 176. Start here. Let me begin by saying, ladies and gentlemen, somewhere at this moment, I am in deepest, darkest Asia, probably enjoying a very pleasant repast or having just enjoyed dinner and heading off to bed. So this is a recorded edition this week while we continue to tour Southeast Asia, and we'll be telling you more about that when we're back in May. However, one of the things that happens, of course, while we're traveling the world by air is most of the world's freight and cargo, and good grief, some people apparently have been talking a lot about trade during the course of the last month. I can't think why. But one of the most important things on earth is, of course, those two mega canals that we have in the world. And think about this, ladies and gentlemen, with La Nina having passed us by in the course of the last year, finally, the drought of 2024 has ended and the Panama Canal is back at capacity. The Panama Canal enables 4% of world maritime trade and no less than 40% of US container traffic. Now, that is, of course, worth considering because the corollary is pretty much true when we look across the other side of the world in the Suez Canal, where indeed Vice President J.D. Vance was much quoted recently on the grounds that there's barely a small percentage, what is about 3% of US trade is actually going through the Suez Canal, whereas it's something like 30 or 40% of European trade. Interesting to think about these two major commercial canals because they both actually have very different capacities for ships. Suezmax, now there's a term you don't hear very often, they can nowadays have a capacity of 19,000 TEUs, a TEU being a 20-foot equivalent container, whereas Neo-Panamax, now everything's gone neo in this age, ladies and gentlemen, Neo-Panamax are now capped at 14,999 TEUs. But hold on a second, you say, what is Neo-Panamax? Well, actually, originally the locks on the Panama Canal were restricted in cargo size to Panamax ships. They had a mere 4,500 TEUs in capacity. Nowadays, Suez can manage to occupy 4 times that amount effectively, and the Panama Canal itself is taking on pretty much, well, almost 5 times that amount you can manage to get through Suez, and 4 times that amount you can get through the Panama Canal. What interesting numbers! Albeit probably carrying a lot less objects from China and Temu to the USA through the either canal at this juncture. Our guest today, ladies and gentlemen, is Matthew Ringgenberg. He's Professor of Finance at the University of Utah, and his focus of research is the role of institutional investors in financial markets. Right up our street, ladies and gentlemen. Specifically, Matthew has examined how the actions of short sellers, hedge funds, mutual funds, and exchange-traded funds interact with various frictions to affect real economic activity and the formation of asset prices. So, please tell me, welcome to the show, Matthew. Where in the world are you today?
Hi, Patrick. Thanks for inviting me. It's really awesome to be here. I am actually somewhere that I'm going to guess nobody in the history of your show has ever broadcast from. I'm in Ketchum, Idaho, which is a small town in the mountains of Idaho.
Ketchum, Idaho. Yeah, absolutely. Even during lockdown, there was no one to be found in Ketchum, Idaho, who was on our roster of guests at that point in time, even though all the people from New York were invariably not in New York during the process of time. So what on earth takes you to Ketchum, Idaho?
Well, to those of you who spend a lot of time in London and New York, this answer is going to sound absolutely absurd. But I live full-time in Salt Lake City, Utah. And when Utah gets too crazy and too crowded, I have to escape to the mountain town of Ketchum. So Ketchum is kind of a bucolic little ski town of about 4,000 people in the mountains. And yeah, it's one of my happy places.
Sounds absolutely marvelous. And is the ski season long?
You know, not as long as probably some places like Utah, but it's still going on right now. So hopefully I'll get some skiing in this weekend.
Excellent. That sounds terrific altogether. Well, certainly if the weather's continuing from where we are in the Caribbean right now, you're going to have lovely skiing this weekend because it's raining pretty heavily in the Caribbean. So if it's raining in the Caribbean, that usually suggests there's snow somewhere further to the west to be had at this time of year. So tell me, I mean, how did you manage to get into the world of financial academia, Matthew?
Yeah, I mean, it's an interesting question. So when I graduated, I did my undergraduate degree in both finance and economics, and I've just always found finance to be a fascinating field. And for a number of years after I graduated, I worked in Chicago as an economic consultant and basically did valuation work. So I would value intellectual property, and it was a lot of fun. But I kind of realized over time that there were just so many questions that I wanted to focus on. And the hard part about having a consulting job is you get to kind of do research, but people tell you what you have to study. And I wanted to choose my own topics. And so I decided to go back to grad school, get a PhD, and here I am.
Fascinating altogether. And so you got you went to grad school, you got your PhD, you came back. And tell us, I mean, how did you then get started on your academic journey?
Yeah, I mean, there's so much serendipity in life. I mean, and so, I mean, this is where I like to kind of joke. If you had told me 15, 20 years ago that I would be a finance professor living in Utah and spending time in Idaho, I would say you're absolutely insane. At the time I had been working in Chicago. But way leads on to way. So I went to grad school. I gravitated towards a professor who was at my university who was doing work on short sellers and securities lenders. And I really thought this was a fascinating area that we didn't really know a lot about. And so I started digging into it. And way led on to way. I really started falling in love with doing finance research. And today, now I study short sellers, securities lenders, hedge funds, all the kind of topics you talked about at the beginning.
And so, I mean, there's a very, very interesting one. Let's get straight into a nitty gritty topic then. I mean, short sellers. There's something that can rapidly get you excluded from all manner of polite conversations incredibly quickly. But, for the professional finance world, they are more than a necessary evil. Tell us a bit about your research in the field there.
Well, I think what you said is exactly right. I mean, if you go back and look at old archived issues of, say, the New York Times or the Wall Street Journal, short sellers have been vilified since the very beginning. But I think all of the academic research mostly points in the same direction. And basically, it suggests that short sellers are kind of a really crucial component of modern financial markets. In some sense, I kind of like to joke, they're like the plumbing beneath the streets. So you don't really kind of pay attention to the plumbing, and no one thinks it's exciting and sexy, but you're really glad it's there. And I think short sellers and securities lenders play that same role. They really help markets function, and that's what all the research shows. Without short sellers, markets just wouldn't operate as well.
Yeah, and of course that's a very interesting one because the whole world has changed, and admittedly it's far too early to tell from a lot of hard data because it's only been days, but one thing that has changed a great deal for the world of short sellers has been the settlement window, because I can certainly recall, well, when I started my career in London, we still had 2-week and 3-week account periods, which were magnificent. I mean, everyone could effectively be a short seller because you had 2 or 3 weeks before you had to buy the stock back, depending on the account period. Nowadays, where we've gone, T+5, T+3, T+2, and now to T+1 in the USA, that obviously has had quite an impact on the dynamics of short selling, even though we probably can't tell a lot about T+1 yet.
Yeah, I think that's right. And so just for your audience, I'll give kind of a real quick background. I mean, the way short selling traditionally works in equity markets, if I want to short sell a stock, I will borrow shares from someone who already owns them. Say Patrick already owns them. I'll borrow shares from him. I will then take those shares, sell them to someone else on the market. I hope the price falls. If the price falls, I buy those shares back. It could be from anyone, not necessarily the person from whom I originally, to whom I originally sold them. And then I return them to Patrick. And so for that to all happen, you have to have this kind of infrastructure underneath financial markets. And that's what we call the securities lending market. And as you said, there are all sorts of wrinkles related to this: settlement periods, T+1, T+3. And I think all of these things are an underappreciated aspect of just how complicated modern markets are and how important all these details are.
Yes, detail. There's something that the modern day mainstream media seems to struggle with a lot of the time, from all sides of the aisle and all sorts of backgrounds. And when it comes to finance, the misunderstanding is quite enormous. So, I mean, it's interesting when you talk about stock lending, because that strikes me as one area of financial markets which is almost never discussed, but yet it becomes incredibly important because obviously to be a successful short seller, I mean, just to execute a short sale, you have to have someone who's going to lend you the stock, particularly nowadays in T+1, because you just can't settle otherwise. That obviously puts a lot of onus onto the system. And it seems to me that there's been a lot of effort to try and curtail short selling in recent times, which maybe is not making for a better market in places.
Yeah, and I think that's exactly what the academic research shows. And so, I think people maybe who aren't familiar with financial markets just have this intuition that somehow selling something you don't own, something that you borrowed, is just somehow wrong. But I don't think that's really necessarily the right way to think about this. What short sellers are really doing is helping make sure that financial market prices are accurate. And that's something that's good for everyone. It's good for you as an investor. You want to make sure that if you're buying shares, you're buying at the right price. But it's also, I think, the most underlooked aspect of all of this is that financial markets fundamentally exist to allocate capital in the economy, to make sure that money is flowing to the projects and ideas that are most beneficial. And short selling and securities lending helps make sure that process works. It helps make sure that the economy functions as well as it possibly can.
And that's a really, really important thing, as you say, that people don't really look into. Now, tell me, though, I mean, is the future of short selling all about short selling stock, or is it about the expansion of, say, derivatives products? Because obviously, you look, I mean, when I started in this business umpteen decades ago, at that stage, there were barely a few megatastically large, by the standards of the time, shares in the world that actually had options on them. So it was very, very difficult to reach a proxy short on that. You look at the market nowadays, and I mean, we have an incredibly blossoming world of shares, not reaching all of the 2,500 names or whatever that are quoted in the USA, but hundreds of them are. Is an expansion of derivatives products a way in order to try and help better price shares through enabling proxy short selling?
I mean, that's a really fascinating question that I think academics have been debating for a long time. So, in some sense, you're exactly right. I can go to the option market and I can synthetically recreate a short position. And so you might say then it's equivalent. But I've actually done quite a bit of research into this. And it turns out because of various frictions, they're not exactly equivalent. So I've kind of come to view derivatives markets more as a complement rather than as a substitute to something like short selling. And the real issue is there's kind of multiple aspects of this. One, just derivatives markets in general tend to be less liquid. So the transaction costs are a little bit higher. But two, kind of more practically, one of the other kind of fundamental rules of finance is that there's no arbitrage. And so it turns out that often whenever short selling is hard to do, synthetically recreating a short sale via options is hard to do. And so those markets tend to actually track each other pretty well. And as a result, they're not really substitutes. That having been said, I think having more derivatives would probably be a good thing from just a risk sharing perspective.
That's very, very interesting. And so I just want to drill into something there. Did I hear you correctly? You were saying that often derivatives are more expensive to execute?
Yeah, I mean, at least in US equity markets, I mean, I'll be careful in exactly how I say this, but usually if you look at option contracts, the bid-ask spreads tend to actually be relatively wide, at least compared to equity markets. And as a result, it's often not that cheap to synthetically recreate a short position. The other thing I will say, though, is when I go back to kind of how a short sale truly works, in US markets, I borrow this share. So I might borrow a share from Patrick and sell it to someone else on the market. But you might then ask, why would Patrick lend me his share? Well, in US markets, I will actually pay a fee to Patrick for borrowing his share in the lending market. And it turns out that fee ends up getting passed through to option prices as well, because option market makers often hedge out their position by short selling. And so if it's expensive to borrow shares, it tends to be expensive to trade options.
That's a very, very good point. And actually, you do hit the nail on the head, which is quite fair, particularly in single stock options. And I think this dates back to all manner of other problems that arise, which are also partly technological, because options market makers are being throttled at all points in time, understandably, because if they mimic every single move, micro move in under the national best bid and offer in the stock, they can obviously end up using a lot of bandwidth, which therefore upsets the exchanges and raises costs for everybody. At the same time, if they find themselves on the wrong side of a stock that suddenly starts to move a little bit, their bid offer may actually be wrong, and therefore they're pricing the option wrong, which is a very, very interesting issue over and above how do we actually manage to make the options market more efficient, given, before good folks like Kevin at NASDAQ and others are jumping down my throat here, the fact that the US equity options market has expanded inexorably and is an incredible thing of beauty and is so efficient compared to what we had 20, 30 years ago. So that's a very, very interesting point. Fabulous point. You're talking about the cost of borrowing stock becomes pivotal, because actually everybody has to borrow stock. And if you're hedging your delta as an options market maker, you're effectively implying the same cost through. So I suppose then that raises the question, and I don't know what your thoughts are, where do we go in terms of trying to make stock borrowing more cost effective, or essentially cheaper, if there is a way to do that?
Yeah, I mean, I actually think this is an interesting question that should be explored a lot more. Now, I'll be careful not to say anything politically controversial, but politicians seem not to be that excited about helping short sellers for the various reasons we've talked about already. But if you could convince them to actually appreciate the benefits of short selling, I think there are a couple of things we could do to help make short selling and securities lending markets function better. And probably the biggest thing is more transparency. So the securities lending market in the US is what we call an over-the-counter market. So most of these transactions happen in a way that basically makes them invisible to other market participants. If I borrow a share from Patrick, other people can't see the terms of that trade, at least not in real time. And as a result, I've actually done some research on this. We show that different borrowers in the securities lending market might pay very different fees to borrow the same shares on the same day in the same stock. And so that idea that basically different people could get charged different fees is an example of, I think, an inefficiency in the market. And just having more transparency would actually probably both improve the securities lending market and, as a result, improve short selling.
Fascinating. That is really, really fascinating and very, very incisive. And I agree with you. It is difficult when the political climate, and let's say that's not party political, the political climate is such that there is a general feeling that helping short sellers is a bad thing. And if we see that taken to extreme in other countries, for example, like India, where they repeatedly ban the futures on particular produce, food produce, normally simply because the prices go too high for people to be able to buy them, and they blame the markets for picking the wrong price, when it's actually usually because there's just not enough of the stuff to go around. That old demand and supply curve, which even economic neophytes like me can manage to get their heads around. So, I mean, this is fascinating. You've obviously done huge amounts of research over time, but it also raises, for me, a fascinating question, because I talk a lot to academics in Asia, in Europe, in the USA, and I must say, the best conversations on average come from speaking to US academics when it comes to research and markets. And I'm just curious, I mean, have you any perspective on that? Because it does seem incredible that we have such a burgeoning financial academia in the USA that really have good practical things to say about markets.
Yeah, I actually have thought a lot about questions like this. And so, kind of the role of universities and how the US university system got to be where it is. And I do think this is actually a very important topic, especially in the current political environment. I think a lot of it is by luck. So if you really go back and look at the history of research universities, I think the modern idea of research universities started in the 1800s in Germany. And they kind of started this idea of having these universities that subsidized research and created new knowledge. And it paid huge economic dividends. It helped the economy greatly. What then happened over time, especially around the World War II era, is a lot of the top German academics ended up switching and moving to the US. And almost by luck, it created this amazing research university system in the US that I'm honored to be a part of. And I think one of the things I've kind of learned over time is ideas breed ideas. And so just being surrounded by a bunch of other people who are curious and who think about research all the time helps you come up with better ideas. And so, I don't think there's any magic secret to the US university system other than that it encourages discourse, it encourages free thinking. And we've got a lot of people who think very hard about economic questions of interest.
That's very interesting, and I'm absolutely agree with you. And obviously, I mean, I suppose we saw it in solid objects as much as we saw it in theoretical thinking when it came to all manner of things that took place in US academia. And I'm thinking, of course, of somebody like Werner von Braun, who's sort of I suppose, in a way, the poster child of people who fled Germany after the Second World War and ultimately did incredible things for the US and ultimately the global economy. When it comes to financial research, I suppose I would also posit two things. It seems to me that, one, a lot more money floats around the US financial system, which I think can only be good for both research and getting quality researchers. I just wonder what you think about that.
Yeah, I mean, I think that's part of it too. I mean, in some sense, the US university system has benefited from the rise of professional degrees. And so if you think about something, if you want to talk about economics and business education, business schools have been very successful because they created an education product that was very successful, things like the MBA. And because the MBA has been in high demand for a very long time, that provided money to invest in things like research. And I think, those two things have kind of fed off of each other. I always have kind of thought that, teaching and research are natural complements. If you want someone who's a subject matter expert, who can really teach people how to understand a topic, who better than someone who's literally obsessed with that topic and thinks about it all day and night? And that's part of the beauty of the US system.
And I think also there's that element of the US system seems to me to be fabulous at taking people who've been great practitioners and then instantly sucking them into the academic system. I mean, some of those people have come out of academia and gone full circle, but there is that amazing number of people. I mean, I don't wish to be rude, but you go some universities in the rest of the world and they have, the entrepreneur in residence is someone who's done great things and has undoubtedly been successful, but at the end of the day, they didn't actually create necessarily headline name businesses. Now, I mean, admittedly, I don't think that every business should be a unicorn, but when you look at some of the people who go to the US academia and end up being at the top end of those sort of, for want of a better term, celebrity business faculties, it is quite mind-boggling, the quality of people that end up lecturing there.
Yeah, that's exactly right. And, and in some sense, one of the amazing things about academia, especially in the US, is you get exposed to all of these great people who have been unbelievably successful in everything that they've done. But you also see this. I mean, I know a number of academics who have left academia and gone to industry, gone on to work at large asset management firms, large consulting firms, the Federal Reserve, government agencies, things of that nature. And I know a lot of people who started in those places and then went to academia. And I think that mixing is part of what actually breeds great new ideas. I mean, fundamentally, in a way, the process of creating knowledge is about trading in ideas. And so the more you can kind of mix up people's backgrounds and get people who have diverse perspectives and diverse paths, the more likely it is that I think you'll end up with great new innovations.
Yes, and I think certainly none of that was more true than, say, in the history of the derivatives business, when you look at somebody like the great Professor Dr. Richard Sander coming out of US universities, but he really is a polyglot as well as an economist, an art lover, you name it. And the cross-fertilization we've seen from lots of people like that has been fantastic. And by the way, I don't want to deprecate the rest of the world's academia, because in fact, over the course of the last couple of weeks, before we had the joy of chatting to you, Matthew, we've had the incredible opportunity to speak to Sir John Kay. We spoke to Sir Paul Collier, who are truly, I think, the two greatest living UK economists and have a great deal to say that's really, really interesting about business and finance. But it is just interesting that, the machine, as it were, of the sort of, I mean, I'm sure probably academics, vice chancellors would be appalled at me saying this, but the factories of innovation that the US has managed to produce are quite incredible.
Yeah, and they really are, and in some sense, again, I worry in a little bit that universities have kind of lost a little bit of their focus on just how spectacularly important this innovation actually is. But if you go and look through history, I think it's very clear that having these intellectual environments, promoting discourse, promoting debate, letting people come up with new and sometimes even crazy ideas is really the key to human progress. And even in just something like finance, where you might say it's impossible to have these great innovations, I think there's been some just absolutely amazing innovations that have profoundly changed the course of human history. To
Agreed.
me, I think one of the most underappreciated ones is someone like John Burr Williams, who basically came up with a net present value rule. And your readers are probably familiar, or your listeners are probably familiar with the basic idea of the net present value rule, but it might not sound exciting. This thing has probably improved the allocation of capital throughout the world in such an unbelievable manner that overall GDP has probably increased by an unbelievable amount just because of this simple idea. And so sometimes simple ideas can actually have really profound impacts on human welfare.
And indeed, as you say, I mean, one of the things that's very interesting when you move beyond sort of theoretical economics and say political economics into financial markets, financial economics, and so on, is there is a really good proving ground there. And I mean, it still blows my mind that in 1974, they launched the Chicago Board Options Exchange, SIBO, to trade single name equity options, but they didn't have a Dodd-Frank calculation. They did a Black-Scholes calculation. Sorry about what a terrible mistake. They didn't have a Black-Scholes calculation, and so, there was no core model. And it's a bit like trying to think of how cavemen had games of I Spy because they didn't have an alphabet. I mean, they couldn't say I see something beginning with sheep because you would guess it. It's just incredible how those innovations have really moved market. Net present value, fabulous one. Very, very good example.
Yeah, and I also think you're exactly right. I mean, if I had to come up with other great examples, you hit it right on the head. The Black-Scholes-Merton innovation of how to price options had an unbelievable impact on financial markets. And so, in some sense, you're right. It's kind of amazing that option markets kind of grew up right as this pricing formula actually grew up. But in another sense, it's not a coincidence. I think they benefited each other. Black-Scholes-Merton probably wouldn't have been that successful as a formula or an idea if there weren't a practical application. And the practical application probably would not have been anywhere near as successful if we didn't have the theoretical underpinnings. And as a result, the world, I think, has permanently changed. Derivatives markets have had an impact on almost every aspect of the economy.
Absolutely. And when it comes to peer group review, with no disrespect to the most fraught of academic debates, having your paper being tested day and daily in real time by 2,000 or 3,000 traders on the floors in Chicago, and indeed also Boston, Philadelphia, New York, and elsewhere at that point in time, that is a peer group review that really beats crowdsourcing or crowdfunding in any way, shape, or form.
Yeah, I think that's right. I mean, for those of you who maybe haven't followed some of this, some of the academic literatures have had kind of these crises lately where they're having a hard time replicating a lot of the results. And so if you think about something like psychology, there have been a lot of controversies lately. But I think you're exactly right. Finance, because it has this practical real world angle, my understanding is every time I write a paper that goes in the Journal of Finance, there are practitioners who set about digging it apart or breaking it apart and really understanding whether or not it works in the real world. And so the fact that there's this back and forth between academia and the real world, I think is really, really beneficial for both aspects of it.
Yeah, I mean, it really helps a great deal when you've got real life practitioners putting your ideas to the test in real time every day. And let's face it, none of them are shrinking violets about telling you about something that they believe might need improvement. So it certainly gives you some quite brutal feedback in real time. But it is very interesting, that interaction, and certainly something which has helped. But then, I mean, I suppose one question I have coming out of that, and actually this is raised because a couple of weeks ago we were chatting to Dominic Roche, who'd was co-author of a very interesting paper recently about how actually the remains, what there is today of the New York Stock Exchange floor, actually improves price formation in the US equity market, which I thought was fascinating. And one of the problems, though, he was saying is the cost of data is an issue. And I'm concerned about that. I just wondered how that may be impacting your research, because obviously data is more complex than ever before. It's capturing more parameters, but it's also dizzyingly expensive.
Yeah, I think that's exactly right. And I know Dominic well. He and I have worked together on a number of projects. If you really kind of think about how modern markets have changed, the idea that information is valuable is not new. And in fact, I mean, you can go and find these old photos of Wall Street way back in the day where the sky is just kind of filled with telegraph cables because people needed to get information as quickly as they possibly could. So Wall Street has always known that information is a precious commodity. But in the modern incarnation, I think what has happened is the proliferation of trading venues has very much changed the value of data. And it's given the people who kind of create this data a little bit of ability to kind of control how it's used and who pays for it and who gets what. And, from just a pure economic perspective, as I said earlier in the talk, you want to make sure things are relatively transparent because that actually can help the trading process. And so I think this is one of those areas that is going to get a lot more attention going forward, both from academics and regulators, is how should we structure the market for data in the modern era?
That is all very, very interesting. And yes, I couldn't agree more. I mean, one of the things that actually concerns me is it's not just about the market for data overall, but it's actually, are we in danger of losing a vital element of research because effectively the data is not being properly priced for academia? And I think there probably needs to be some sort of a reset there that allows you better access to what are, let's face it, now much, much more comprehensive data sets than anybody's ever worked on before.
Yeah, I think that's right. And I think there's a concern with whomever's creating data that you don't want to give it away for free, and that's understandable. But from a social perspective, I mean, again, if I just back up for a second, why do we even do research in the first place? There's this basically old idea that anytime someone invents some new idea, they often can't capture much of the value they generate, right? Basically because it's impossible to really truly own an idea once you've actually made it public. And as a result, if you think of the net present value rule, that means that because the inventor doesn't capture a lot of what they create, they have less incentive to invest in finding new ideas. And that then leads to this idea that we should subsidize research, that it's good for society, it's good for the economy in general to subsidize research. And so from that perspective, I think just on the data question, you get a similar idea. You would actually want to make sure that data is available, maybe at below market prices, just for the research perspective, because that could actually grow the pie for everybody else.
Yes. I mean, being able to pick up, and particularly in this current age where, let's face it, every day the markets are dropping us a set of data, which makes the recently unveiled JFK files look like a mere bagatelle. And it therefore becomes quite difficult. One of the great media failings of all time, in real time, we're going to tell you who killed JFK. Yes, never going to happen. But it's fascinating what you say. And I think also your point is well made about data always having been a lifeblood. I mean, data, speed, information. There's also, I think, one of my favorite photographs, which I've used a lot of times in presentations, is demonstrating that low latency trading is nothing new. Because in fact, the original JP Morgan building on Wall Street, which is a curiously shaped building that sits off to one side, and no one can understand why there's a door that drops you onto Wall Street essentially in the middle of nowhere. Why is it not pointing at the front of the New York Stock Exchange? And the answer was because it was the shortest corridor that you could run down from the tape room just inside that door to get you on the floor. So you had the shortest possible transit to the floor of the exchange, at which point in time you were able to run in and instantly transact your orders. And I mean, we know all of those sorts of things as we go through that. The data has been such a huge exponent during time, and obviously in the Napoleonic Wars and so on, where you've got these amazing stories of the Rothschilds using data to their advantage in a remarkably, how would one put it, abstruse fashion. Perhaps that's a good big word to try and cover up what they did. But it's certainly really, really interesting. So, I mean, looking though at research, I mean, very quickly also, we sort of divide in slightly in two here. We bifurcate the issue because I suppose a lot of the core viewers coming today, they're going to be watching this recording talking about the future of research, and they're going to say, well, yeah, Matthew Ringgenberg, but I get all this research every day. And they're talking about, stock research, market research, and so on. And at the same time, there's academic research. And each of them have got, I think, acute, not necessarily problems, but issues that they're going to have to address in the near term.
Well, here's kind of, I think, one of the complicated ideas about research. There's this old quip that's often, I think, falsely attributed to Einstein, that if we knew what we were doing, it wouldn't be research. And when I was younger, I don't think I fully understood that quote. But the basic idea is research is the process of just searching through a variety of possible things. And oftentimes ex post, it looks foolish. It looks like it wasn't worthwhile. And in fact, as a result, most research is worthless. And yet, I still think we have way too little. Because when we do hit on a new idea, when someone does come up with something new that's a path breaking, it's so valuable. It grows the pie for everyone so much that the whole process is worthwhile. And so the recent example that I'll give is the National Institute for Health in the US a long time ago started supporting research into the venom of the Gila monster, which is kind of a giant lizard, I guess. And you would say, what a weird way to spend federal funds, investigating the venom of some lizard. And it turns out that this just seemingly random research project created some of the foundational knowledge that led to the Ozempic drug, the revolutionary weight loss drug. And so you just never know where research is going to lead you.
So if you're a celebrity who's suffering a weight problem, you should fund more academic research. That is clearly the direct message. No, but I mean, I'm being facetious, but that's a great point, because as you say, the vast majority of research is useless. I always think of research as being like out of the money options. So you'll read these books where people will go, all people buying out of the money options are idiots. And I go, not so fast. Because that incredible out of the money option insurance policy can be something that will completely save you, make you whatever. The thing is, though, you don't want to spend all your life essentially trying to shoot for that minuscule risk element as you're going along. And that's a very, very different thing. So, yeah, I mean, it's interesting that that's how you fundamentally look at that. Maybe Hollywood is the next area of research for lizards. That's a possibility for funding, of course. But it is fascinating how these weird, wacky, wonderful things come out, and also how people can be doing research and they don't realize how relevant it is. I mean, we talked about Black-Scholes, which obviously was relevant because they could see there was going to be a problem with this growing options market. But there are a lot of cases where people have been thinking about stuff, but nobody's actually invented the solution to it that they're really thinking their way around.
No, I think this is exactly right. I mean, again, the typical research project is worthless, and yet we still have way too little research. And you can go throughout history and just find all of these examples of people working on problems that just seemed, completely impractical, that would never be useful, and then ended up changing the world. To give one other example, in the 1800s, a small number of mathematicians were studying higher dimensional geometry. And, you can just imagine some politician at the time saying, the world is three-dimensional. Why would we need to study more than this? And yet Einstein's general relativity taught us about four-dimensional space-time and could not have been done without this foundational work. And so, again, if we knew what we were doing, it wouldn't be research. We've got to do crazy, weird projects. Human progress depends on it.
And again, that can be very difficult when you're dealing with government employees who are rooted to making sure their career lasts long enough to see their pension. And I don't mean it as a disrespectful thing, but it is obviously very, very difficult, because at the same time as those guys were doing the research into four-dimensional geometric space-time progression, etc., and laying that out, I do believe there was one of the American states which decided that pi was 4 and actually passed that as legislation. It's within a decade either way. So you can see that there is often this slight issue between the political civil service classes in certain areas alongside where the innovation's taking place. So tell me, I mean, as you look at research going forward, we need more of it. We can always do with more of it. But is there a way that your economic market researchers suggest to you that we could use market structures to do that or incentivize the production?
Yeah, that's a really interesting idea. And so I do think that the research process is ripe for innovation. A lot of the ways in which academics work today, is grounded in the way universities were structured 100 years ago. And the world has changed. University research gets published in journals that are, printed on a piece of paper and mailed through the snail mail to people. A lot of this could be drastically changed and drastically improved. And one possible way is to have markets actually help facilitate the process. I've actually been working on a project with a few other academics called Informed Discourse, where the idea is to help try to disintermediate the publication process and to help, basically boost research innovation.
Well, that also, I mean, that raises then a very, very interesting issue. We're on the one of my favorite words, disintermediation, favorite of capital market revolution at all. But one of the things I find quite fascinating is that, okay, there are certain academic presses that do profit from academic research, and that seems like a sensible silo approach. But actually, you look at a lot of academic publishing, and I mean, people like Robert Maxwell, a famous Briton who turned out to be a total fraudster. I mean, he based a huge amount of his fortune off publishing academic research, which essentially didn't enrich the people who were doing the research. It just gave them the glory and the citation. So there's certainly a very interesting possibility there in the publication. Do you think that there is a way to encourage particular people to fund research? Do you think that can be better done? I mean, back to a kind of old Victorian sponsorship kind of method more directly?
Well, yeah, I think there's a couple of ideas that have been talked about, and to be, fully transparent, these are not, I'm not the first person to have these ideas. On the funding side, the way it typically works in a lot of the natural sciences is you have to write a lot of grants. And the grant writing process ends up taking a huge portion of people's time. And I've actually seen people propose that a much simpler process of just awarding a large amount of money to everyone, instead of kind of making them jump through hoops and having this huge bureaucracy that costs a lot of money to try to pick where the money should go. If we just awarded these grants, maybe equally weighted to everyone, would actually probably improve society quite a bit. The other thing I've heard people talk about, and I think you and I and probably most of the viewers share a love for markets, is that we could use things like prediction markets to help actually figure out which ideas are best. And I actually think that's an incredibly intriguing idea.
Well, that's a really interesting one, because that goes all the way back to good grief when, and I mean, I don't claim to be the inventor of these concepts, but I mean, I was a co-founder of InTrade Trade Sports back in the 90s, and actually I wrote stuff about what they now call prediction markets. I've never understood why you call a market a prediction market, because that suggests the other ones don't predict. But anyway, I didn't pick that nomenclature, someone else did. But the thing that was interesting about those markets, I always thought, was exactly the opportunity to see how, where the money was really significant. And that's why I was writing about them, 30 odd years ago. And I think it's also quite interesting that we're seeing an explosion of them right now into very, very popular arenas, but actually nobody's really necessarily thought beyond it. Although we did get, what was it, DARPA and The Economist wanted to run one about 15 years ago, which was actually, I thought was one of the more intelligent ideas that The Economist has come up with in a long time in terms of focusing people on where the money is. Although then at the same time, it says my natural innate contrarian comes out, and I would say, the entire world's economists all say, for example, and we're not discussing it today because the rest of the world's already discussed that, but all Trump trade policy is bad because the world's economists say it's bad. And I'm sort of the opinion that once you get 1,000 economists all saying one thing, it's a good idea to go contrarian. And that's, so there is also that element to it. But yes, I think you're right. I mean, I think you could identify things that people are particularly interested in or that need research through those sorts of methodologies.
Exactly. And I think that's it. Prediction markets have just an amazing potential to actually get people to, put their money where their real beliefs are. And as a result, they can actually aggregate information much better than most other ways of aggregating information and help us make better choices. In academia, I can think of at least one example recently where they ran a small prediction market where they decided they were going to replicate a bunch of studies to make sure that they were valid. And before they did the replication, they actually ran a prediction market and said, predict which studies will be able to replicate. And it turned out the market actually did an amazingly accurate job. And so as a result, I think what these prediction markets show us is that they're very good at getting people to reveal the information they have. And that's a great thing for society.
Yeah, although then that, of course, brings us back fascinatingly to a topic that we probably won't touch either, but you end up thinking this all the way through, and then you end up thinking maybe insider trading isn't such a bad idea because it gets all the information priced into a stock, given the fact that 80% of insider traders lose money. Down that road madness lies. As we all know, there's legislation to prevent it, and we're not trying to incentivize anybody to commit a crime, far from it. But it does become a very, very interesting philosophy. But going back to research, I mean, it is fascinating because there are all of these different possible models. And by the way, I don't think any one of them is going to be the right way, but it would be really fun to see somebody trying a few of them, at least in certain areas of research.
Yeah, this question kind of prompts me to think about one of the most ironic things I've always thought about academia, which is we tend to study everything except academia. And so one of the things I would love to see is just more experiments on the research process. What's the best way to actually fund projects? What's the best way to evaluate projects? What's the best way to actually come up with research ideas? All of these things should be studied. And it would be spectacular if we could convince people to actually do experiments on this. I've tried, but to date, I've had quite a bit of trouble convincing people to actually do this. But I think it'd be spectacular.
It's really fascinating, actually, because as you say, I mean, there are certain areas where certain professions just don't want to be benchmarked. And I mean, I think also the medical profession is quite interesting in that sense. And I mean, all those of us who've ever been to YouTube, I think it's all but impossible that you've never managed to come across air crash investigation or one of that genre of disaster porn that tells you. But it's so interesting because you look at these perfectly normal men and women who go in and then they end up analyzing with CSI perfection what went on and finding out why an aeroplane decided that it didn't feel like being at 30,000 feet and going 800 kilometers an hour all of a sudden. And you do get that incredible thing where it undoubtedly improves the breed because you're seeing all these people. And then I had a fascinating conversation actually recently in a British Airways lounge at Heathrow, and there was a guy there who was actually a pilot, and he was not piloting that day, which was why he was sitting in the lounge. He'd just been doing retraining to up from instrument training on a new aircraft, blah blah blah. And he was sitting saying, oh yeah, well, I'm looking at retirement in 5 or 6 years time, and actually where they're asking me to work is in the medical field, because they're asking me to bring the science and applicability of practical aircraft safety into hospitals. Because we're kind of really good at working that out when it comes to sanitizing things. But actually, at the point in time when it starts not going well, everybody, different people have very, very different systems of working with it.
Yeah, I think that's exactly right. And I know this conversation kind of makes me think of an old Matt Levine column where he made this point that in the financial market, it's one of the most brutally competitive disciplines that there is. And, if you imagine how tough it is to be, say, a mutual fund manager or a hedge fund manager, and people can just constantly compare you to the performance of an index fund and really understand whether or not you provided value. And few other professions are subject to that level of scrutiny. And so I'm not saying that maybe, every profession should be that brutally scrutinized, but, having more inquiry into how to properly do all of these things is probably worth doing. And again, I'd love to just see more research on research.
Yeah, no, and I mean, I agree. And it's not trying to find disaster areas. It's also actually trying to find, whoa, there's somebody who has a particularly interesting track record in the way that they do their research. So let's give them more money. Because, I mean, you're talking about grant applications. And I mean, having spent far too long living in the European Union and having now given up on that whole agenda, one of the things that's ridiculous there is, and I'm sure you get the same thing, is the system is being effectively gamed. There are researchers whose great skill is honing grant applications rather than necessarily doing great research, which seems to me to be a complete waste of all academics' time, that their skill set is in managing to get the grant, as opposed to, I'd much rather they do the research. I mean, it's like making your football players sell the tickets for the Sunday afternoon game.
Well, and I think, this is also the old quip that as soon as something becomes a benchmark, it ceases to be a valid measure, right? And so I think one of the things that's happened in academia, and I'm sure an equivalent thing happens in almost every profession, is careers start getting evaluated based off of grant money and publications. And as a result, there's a subset of people who just specialize in figuring out a way to get grant money and figuring out a way to be successfully published. And those aren't necessarily the same thing as actually creating new valuable knowledge that benefits society. And so again, what I'd love to see is more research on how to actually facilitate the research process so that we get as much out of it as we can. We really do want to make sure that research is benefiting society on average. And on average, it has, but that doesn't mean we couldn't do better.
Yeah, and I mean, you remind me of a fascinating conversation I once sat in on, which was actually with a couple of Nobel Prize laureates plus a bunch of other people who were all in the same genre of mega academia. And before any wise ass viewer writes in, no, I was not serving the coffee. I was actually at the table at the time, although goodness knows why. But it was quite intriguing because they were talking about things like actually the Nobel Prize for economics. And they were saying, oh yeah, but you can't get the Nobel Prize for economics if you're too commercial. And I was like, what? Sorry, run that passing it. I was like, oh, guy X, guy Y, guy Z, woman, alpha, they're not in consideration because they've sold out. And I was like, define, sold out. And I mean, the guys were literally going sold out like that. And I was going like, oh no, because they commercialized their idea and made zillions. So you can no longer get the Nobel Prize for economics. And I'm like, well, hold on. That's a bit like saying that theoretically my idea would have brought peace to the world, so I'll get the Nobel Peace Prize, as opposed to the woman who actually saved 1 million lives of whoever these people are. But that's oddly how that system works at the top. You may not wish to comment on that because you may be in line for a Nobel Prize for economics in the future. I can possibly comment because I won't be under any sense of not being an academic to start with. But but it is amazing how the system can be. What I'm saying is, it's amazing how the system can be skewed and almost like, oh, you've had all this practical experience. Yeah, but I saw your article in the Journal of Economics, which, no disrespect to the Journal of Economics, isn't necessarily holistically the only thing we should look at as our benchmark.
No, and I think that's exactly right. And so, I won't comment on specific academics, but I do think you're probably correct that there is a general view that people who are maybe too commercially successful have somehow, sold out and aren't as credible. I don't think that's necessarily fair. I mean, I heard it pitched as the Carl Sagan effect. If your viewers aren't familiar with this, Carl Sagan was a really amazing astronomer who did path-breaking research, but also ended up writing a best-selling book and becoming a TV star. And as a result, I think it somehow dampened his reputation as an academic, largely unfairly. And he did great work. But I don't know if this is a fixable thing. I think it's just more a natural human tendency. People get jealous of success. And so, maybe in any endeavor, if someone ends up becoming too successful, they'll somehow be penalized.
Yeah, it is incredible. And I mean, I remember Carl Sagan, the epitome of kind of 1980s TV, alongside, popular trash TV was Dallas and Dynasty. And then you had him, or possibly in the UK, we had Dr. Bronowski on The Ascent of Man, which is an absolutely sensational series. Or before that, you'd had Alan Clark, again, a great art academic who really brought that to the people. And it is interesting because, I mean, he was the man who really understood the order of all the Greek letters in all of his most complex books, at the same time as making it absolutely simple for people who didn't understand a single Greek letter to get what he was talking about. And such a powerful ability to communicate. And I suppose, therefore, I mean, we're approaching, the last 6 or 7 minutes of our show, but it is interesting. So with academia and with research, what do you think are the best kind of couple of lessons that we can take away today that are most important for shaping the future of research?
Well, I mean, I think, again, over time, I've actually become more and more positive on just the research process. And so, of course, it's flawed. Of course, it could be improved. But I think the impact it's had on human progress is just absolutely astounding. And so, if anything, I think we should be going in the opposite direction that we are today. We should be funding research more. we should be encouraging more crazy ideas that just look absolutely foolish ex post, but ex ante, we didn't know what would actually end up happening. One of the books I recently read that I think I would recommend to almost everyone in your audience is Matt Ridley's book, The Rational Optimist. And nobody, by the way, who knows me has ever accused me of being an optimist. But reading this book made me much, much more optimistic on just human prosperity and the keys to success. And I think one of the key points he makes in that book is it's not just trade that has led to human prosperity, but it is trade in ideas that has really generated most of human progress. And so I think we need more of that.
And that's a fabulous book, actually. It's a really, really great book. Matt Ridley is somebody we're actually trying to chase down for this program. I think his argument is he doesn't feel as if he's quite financially brilliant enough, whereas I just think he's brilliant. I mean, he's true polyglot English. He's a replica of the Victorian era gentleman for the 21st century. I mean, he sat in the House of Lords, equivalent of the US Senate. He has been amazing in terms of his ability to understand, but also superb at breaking down incredibly complex things for people overall. Look, this has been an incredible show, Matthew Ringgenberg. Absolutely thrilling. But of course, we can't let you go without asking you that zillion-dollar question. Matthew Ringgenberg, where do you think the capital market revolution goes next?
Yeah, that's a tough question. So one thing I've learned is I'm very bad at predicting the future. But if you kind of force me to answer the question, in the short term, I think it's clear that globalization is backsliding. I mean, markets are becoming less integrated. Capital barriers are being erected. And even before the recent round of tariffs, I think if you really look at the data, global trade has been dropping and markets have becoming less connected. So I think that's the short term. In the long term, I really hope that just the long-term trend from the last 2 centuries continues. We've seen an expansion of markets, we've seen an expansion of trade, and it's corresponded to the largest increase in living standards that humans have ever experienced. And so, we talked about Matt Ridley's book, The Rational Optimist. I'm going to take the optimistic view. I think in the short term, globalization might backslide, but in the long term, the trend will continue. We'll see more prosperity, more progress. Markets will continue to expand.
Markets will continue to expand, ladies and gentlemen, as will this show, as indeed will Exchange Invest at exchangeinvest.com, where you can pick up all of the daily news in the world's market infrastructure every day. Thank you very, very much, Matthew Ringgenberg. This has been an absolutely fabulous discussion about the future of research and indeed much, much more. It's wonderful to chat with a polyglot academic all the time. We could have gone on for hours, ladies and gentlemen. Who knows? Hopefully we'll have some more research from Matthew in the future and we can talk more in a future edition of IPO-VID. It only remains for me to say we'll be back next week, same time, same place. You can, of course, catch our canon of stuff on LinkedIn, Facebook, and YouTube by searching for IPO-VID. If you're looking to build yourself a marketplace, or exchange, then do, of course, get in touch with me, Patrick L. Young. And finally, let me say a huge word of thanks to our fabulous production team today. AJ, Beata, Marianne, and Natalie. Thank you for making this such an epic IPO-VID number 176 on the future of research with Matthew Ringgenberg. I wish you all a great week in life and markets.
Thank you, Patrick.